Well, hello, and thank you for joining us for this World Council of Credit Unions virtual event addressing good governance challenges, global learnings. I'm Greg Newman, Director of Communications for World Council. Today, our international advocacy team continues the good governance conversation they began at the 2025 World Credit Union Conference in Stockholm, Sweden. You'll learn about the challenges and solutions for governance practices specific to the financial cooperative model. A panel of credit union experts from different regions of the world will also discuss the methods and tactics credit unions, especially small and mid-sized, use to enhance their governance practices. Our panel features Barry Harrington, Head of Advocacy and Regulatory Engagement for the Irish League of Credit Unions, Robin Levy, Group CEO of the Jamaica Cooperative Credit Union League Limited, Fumbani Nyungulu, CEO of the Malawi Union of Savings and Credit Cooperatives, and today's discussion will be moderated by one of our own, Aaron O'Hearn, International Advocacy and Regulatory Counsel for World Council of Credit Unions. If you have questions as the webinar goes on, please use the Q&A button at the bottom of your screen. Type your questions in there. Our panel will answer them throughout the conversation today and again at the end of the hour as time permits. And now I will turn it over to Aaron O'Hearn to take it the rest of the way. Aaron.
Thanks so much, Greg, and good morning and good afternoon, good evening to everyone joining, depending on where you're joining from. And of course, as always on a WOCU webinar, feel free to go ahead and put into the chat where you're joining us from if you're attending here today live. We always love to see kind of that power of the global WOCU network to have education opportunities from across the world. So thank you again for joining us. And a big thank you to our panelists who I'll ask to spotlight now. And I think we can pull the slide down as we have this conversation, because this will really be a conversation amongst the four of us here, a continuation, as Greg mentioned, of the Stockholm conference. So really a huge thank you to Robin and Barry and Fumbani for joining us again, because this was really one of the most popular conversations and breakout sessions, with a great lineup of education from our annual conference in Stockholm. But this particular conversation got the most questions on the app that we were using for attendees to submit questions out of all of the breakout sessions, which I think really shows kind of the power of this topic and also the deep expertise of all of our panelists today, both within the financial cooperative sector and outside of that. So a big thank you to them as we join. And I think we'll get the four of us spotlighted here if possible to really make sure that we can have this conversation over the course of the next hour. And as Greg mentioned too, please feel free throughout this conference or throughout this conversation to put into the chat or excuse me, the Q&A section of the webinar that you'll find in the bottom of your Zoom screen, any questions that you have for this group. We will do our best to get to those and are jotting them down too in case we run out of time. But as this group of panelists knows, I have no shortage of questions to ask and really continue this conversation. So a big thank you to all of you for making this conversation accessible to those that weren't able to join us in Stockholm, Sweden in July. So welcome. And I may actually ask as we go through, I really want folks to be able to understand too the systems that you're coming from. We specifically have systems from different parts of the world. So as we kind of kick off some of these questions, I think I'll ask you just to share a little bit too as we go through this about your role, where you're coming from, the size of your system, to share with the attendees. And just a quick note too, before we hop in, we'll say credit unions, SACCOs, financial cooperatives, we're sort of use them interchangeably. They are known throughout the world as different titles, but we're all talking about kind of that same cooperative, financial cooperative model. So just for folks joining us, they may be called SACCOs, credit unions, but we're referring to the same thing as part of this global movement. So with that, I may actually kick off once again, Robin, why break tradition? So we will start with you. And I know Jamaica has a robust governance and internal control provisions really in place to safeguard and strengthen the credit union system. I wonder if you could share again a little bit about your role, the size of the system, but also what works well in Jamaica concerning governance. And, is this something that's kind of evolved and grown over time? Could you share a little bit about that governance journey within Jamaica?
Well, thank you, Erin. In Jamaica, we play a lot of cricket. Um, and I don't mind being the opening batsman. That's actually what I used to do. Good morning, everyone. Thank you for having us back. It's an honor and privilege to speak to on this topic. I am the CEO of the Jamaican Cooperative Credit Union League. The credit union movement in Jamaica is 1 million plus strong individual members in 23 credit unions spread across the island. We have 105, 106 branches spread out all across the island. So we're a fairly large percentage of the population, and that gives us a certain amount of leverage when it comes to speaking with our regulators and the government decision makers. What works well in Jamaica is that we do have a very robust system of working together to hone our policies. In fact, the league partnered with the World Council back in the 1990s, early 2000s, to strengthen Jamaica's credit unions. At the time, there were 80 odd credit unions. And through a process of mergers, mostly compulsory for some of the weaker credit unions, we are now down to 23 credit unions. But we also, with the World Council's help, drafted model policies. So we have a policy for just about everything you can think of under the sun. And we revise it regularly for things that have come up more recently, like sexual harassment, inclusivity, and so on. And even data protection, which the Data Protection Act was passed in Jamaica recently, so that credit unions can look at these policies, edit them and amend them if they wish, but definitely to adopt some form of them. And that gives us a very stable platform from which to build other governance issues.
That's great. Yeah, I think it really highlights the importance of those policies and the strength that it can add to the governance system. And, Barry, building off of that, I might ask you here, with throughout Europe and especially in Ireland, the regulators have really paid close attention to fitness and probity, or the fit and proper standards in terms of what's required for governance and for board members, volunteer board members serving on that governance, and really talked a lot about kind of those expectations. And I know this was something too that came up in Stockholm quite a bit, kind of specifically, what are those standards? Would you be able to describe those and tell us a little bit about what's going on in Ireland in terms of their thinking and around governance?
Sure, yeah. Thanks very much, Aaron, for the invite to be on the panel, and everyone in the World Council. It's great to see Robin and Fumbami again. I'm head of advocacy in the Irish League of Credit Unions. So just a little snapshot of the credit union sector in the Republic of Ireland is approximately 175 credit unions, asset size approaching 22 billion, loan size about 7.2 billion. 3.2 million members out of a population of 5 million, so very high penetration rate. And just really want to pay tribute to all our credit unions who next week's figures in terms of year end will be some absolute, from what we've seen so far, stellar figures coming in with high loan growth and lower arrears. And that really is driven by our volunteer directors. So as you mentioned there, and the fitness and probity regime that the Central Bank of Ireland have applied, not just to credit unions, it's to all financial firms. And the idea behind that is to bring everyone who oversees or runs a financial firm up to a certain minimum standard. Effectively, every role in financial firms are called functions. And depending on the seniority of those functions, there's a different level of threshold that has to be met. If I can put it as simply as that. Essentially, anyone who is in a responsible position on a board, or indeed a professional basis and being paid, has to meet a certain level of qualifications that are known as competency and capability, has to have certain professional standards and conduct, so honesty and integrity and reputation. And the third flank of it really is financial soundness. And they have to, it's not just you hit the target and the threshold once and that's it. There's ongoing monitoring, and there's a big burden on financial firms, including credit unions, to keep the paperwork reporting up to speed. There has been that regime has been in place about 10 years now at this stage, so it has been recently reviewed, and our regulator has put quite a lot of guidance up on their website in terms of how credit unions and other firms should interact with it. And I would say at this stage, it's fairly well embedded in the Irish credit union sector in terms of fitness and probity. And the idea behind it really is stronger governance standards. From a credit union perspective, we do try and pull together our own guidance and bring credit unions together in terms of good practice and governance. But it is there has been a sea change in the governance standards of credit unions since the financial crisis in Ireland. But we would see that as very much raising the bar for everyone, not just for credit unions.
Yeah, thanks, Barry. It's interesting to hear about those standards that are held by regulators for the governance, as you mentioned, not only credit unions, but other regulated entities, financial institutions. I think that's something that we're starting to see more and more of globally. We've certainly seen that in the US with the credit union regulator there requiring ongoing education and other qualifications after they're elected to the board within a certain amount of time to be able to maintain that strong governance standard. So interesting to see how other regulators are doing that. And thanks for mentioning too, I think there's always looking for resources and trying to learn what others are doing. I know the Central Bank of Ireland and other regulators within Ireland have really put a lot of resources out on their website. So thanks for mentioning that. And Fumbani, I want to bring you into the conversation here too, because I know this is governance is an area you've spent a lot of time working in and really developing within Malawi. And I know the SACO system there is strong, and your association has been really a significant part of its success there, and been working with lawmakers to ensure that SACOs are regulated properly. Could you describe some of those changes over the last many years to really strengthen that regulatory framework and governance practices? I know this has been kind of a labor of love and something you've been working hard on over the years there. Oops, and I think you might need to unmute to.
Oh, sorry. Thank you very much, Erin, and it's good again to meet again, Barry and Robin. Yes, rightly put, our SACO system is growing in Malawi. Currently still small, with over 50 SACOs across the country. At one point we had over 300 SACOs, but I think we started a lot of, we started merging quite a number of them when we embarked on the prudential regulation. So we need to look at small, but small numbers, but sustainable SACOs that can save members properly. So that's what happened. So the first change in 2011 was to make sure that we do a cleanup, make sure that we have the SACOs that are sustainable. And that was quite a process. And then they gave us about 4 years. Let me say that SACOs in Malawi are regulated by the central bank. So they gave us 4 years for SACOs to comply. So they were given a pre-license, kind of, not a full license, until 4 years, when full licenses were now given to those that qualified. Now, the changes that we have seen, first of all, is that the whole SACO movement has almost grown 4 times, because now I think there's a lot of credibility to the SACO system. Previously, it was not very possible. We would see small SACOs collapsing with people's money. A number of SACCOs were collapsing that time, but now no SACCO is really, unless maybe one or two, they may have those kind of challenges, but we quickly come in and look at how we can match them with another SACCO or let it be taken over by another SACCO. So there's a lot, there's stability now in the SACCO system. When we talk of governance, there's improved governance in the SACCO system now, because those that are vying for positions, they have to undergo the fit and proper test by the central bank, and that has also helped. And those still challenges, but at least we can see a lot of capacity building initiatives, even from the regulator side, also coming in to strengthen our SACCOs through capacity building. Though we still have a lot of work to do in that area. Yes, so other issues to do with SACCOs now trying to comply with market conduct issues. Now really SACCOs operating like any other financial institution, which is very, very important for building the credibility of the SACCO system in the country. What helped us a lot was the way the National Association would lead the process of regulation and capacity building and advocacy. The three main issues that the National Association is doing, and collaborating with the regulator to see what is working, what is not working. If we see any challenges, then we'll sit together and see how we can grow the movement. So this is what we've been doing in a nutshell.
Yeah, thanks so much for sharing. I think that is something a lot of folks can relate to in terms of that continued evolution of strengthening the system and continuing to work with your regulators. I might, and a question for all three of you. So you all come from different parts of the region, and I'd welcome all of you to kind of build off of each other or comment on each other's responses to this question. But I am curious if you had to select or share a top governance challenge that you've seen and a potential solution or what you're working towards. I wonder if we could have that discussion around. There's probably quite a few to pick from in terms of some of the challenges that are faced, but also a lot of good solutions out there as well. So, Barry, maybe you could kick us off on this conversation, but would welcome everyone to join in.
Yeah, super, Aaron. Yeah, there's quite a lot of issues, but the main topic we're seeing and we're grappling with really in terms of governance is recruitment of directors. It's becoming more and more of an issue, and it is a very difficult and onerous job to be on a credit union board of directors. Big responsibility, a lot of time commitments. And certainly since COVID, we're seeing people's time, well, certainly the level of volunteering is dropping in an Irish context. But what we're trying to focus on, and I suppose an exclusive for you here, is we'll be launching our director recruitment and retention strategy on World International Credit Union Day. So in a few weeks' time. But really what we're focusing on is for credit unions to try and be more proactive in terms of identifying suitable candidates that are in their common bond, also to try and do some more succession planning, and also to really try and highlight the benefits of being a credit union director to a cohort of society that may not have previously been involved. So we're really trying to target younger people to come on board on board of directors. So we're really trying and pushing that. But it's a big challenge for credit unions. We're unique in the sense that our boards of directors are volunteers, and that is a very difficult space to be in, to get the right skills mix and qualified people. So I'm sure it's the same for Robin and from Bani, that they'd have similar issues, but that's certainly one of the key areas we've identified as main challenges, director recruitment.
Yeah, I mean, that recruitment, who you are able to get on the board, making sure you have the right mix of board members to fully represent the community, the field of membership that they represent, but also to be there to set the vision and direction, the strategic direction of the credit union so important. I wonder, Fumbani, is that something that you're seeing? Are there other challenges that you'd like to add into the discussion here?
I want to agree with Barry. The capacity of the directors continues to be a challenge. To really get the directors that can do the job is a nightmare. The other one that I can talk about is maybe connected to capacity is the raw conflict amongst the board members, management, so board and management relationship. Those are some of the issues we continue dealing with. The board not respecting their role, sometimes stepping into management and vice versa. Sometimes the CEO being operating like a board member. All those things you find real challenges in that area. The other part could be the supervisory committee, for example, also trying to be more powerful than the board themselves. They want maybe to check board decisions now and again, and that is another challenge that I've seen in some parts of Africa. I shared before that you see that even for board members, for example, to travel to do training, then the supervisor will want to know. They want to approve that yes, you can travel. Such kind of issues are issues to deal with. The other main issue that I see, for example, in some parts here, especially here in Africa and Malawi, is the issue of the term limits of the board. Should we have an open term for the board members, or we should have some limits, 10 years, 5 years, or in our case, it is 6 years, 2 terms of 3 years each. But what I see is the board members, by the time they get into the 5th year or 4th year, that's when they now fully understand and they start contributing properly to the growth of the credit union. But you find that maybe at the same time they have to leave because the law is saying maximum of 6 years. So the question that the National Association has been asked by the regulator is, what should be in the law? Should we remove the term? Also, we also understand that leaving it completely open, there are also, yes, there are pros and cons, but now we're still stuck as to what should be the direction. So those are some of the challenges we're facing here in Malawi.
Well, thanks for sharing. And Robin, there's a lot in there, so I'm going to let you jump in here. And
No, I mean, thanks, Erin. I wanted to jump in long before because, we're here, we have some of the same issues. One we don't have, though, Barry, sorry to tell you, is actually recruiting persons to boards. Credit unions have high penetration here. It's actually more a case of persons not being able to get onto boards from membership. So it's kind of a prestigious thing in Jamaica to be a member of a credit union board. So we don't have that problem, thank God. We do have the same issues in terms of bringing them up to speed to understand their roles so they don't overstep into management. And sometimes we have the same, sometimes managers can be overbearing. And actually, it almost is a struggle for power between senior management and boards. And, part of our job as a league is to try to mediate some of that. We do offer training for both, credit union managers and board members and supervisory committee. We do have some of that as well from body. So, you're talking and I'm here nodding and smiling like, this guy maybe worked at a Jamaican credit union. The issue of term limits is one we have raised, and many credit unions have adopted term limits. The thing about, to the point you mentioned, someone is probably just coming into the presidency after 5, 6, 7 years. So to have a term limit of 6 seems a little too restrictive. Many of our credit unions have 9-year 10-year terms. Even my own board, the league board, you know, the maximum number of years a president can serve consecutively is 3 years. So you join the board, there is absolutely no way you're going to become president within maybe 4 years. And even then, you probably want to put them in, you know, another role, secretary, treasurer or something before they can graduate. So you are speaking to someone only being able to be president of a credit union after 6, 7, 8 years.
Yeah.
So 6 years is definitely to us too short. The greater challenge we have is who is on the board. We find that women and young people are underrepresented on the boards. It's something we've been working with the credit unions to try to fix for a number of years. Our membership, like most credit unions around the globe, is aging. We find the average credit union member's age is increasing, and this is not a good thing, we don't think. Not that we don't, you know, prize our senior citizens as members of credit unions, but most of the loan growth is going to come from persons under the age of 40.
Yeah.
And so we are trying to get more young persons into the movement and trying to reduce that age barrier. But it also means that when they go to a credit union board meeting or they meet a credit union board member, it's a male who is over 55, 60 and looks nothing like that demographic. So we are advocating for more women to be on boards. More persons under the age of 40 to be on boards. In fact, we are thinking ourselves of drafting a rule that we'll ask credit unions to try to adopt to ensure that at least 25% of the board is female and at least one board member is under the age of 40.
Yeah.
Well, that's a great thing to share. And Barry, I don't know if you want to share in terms of in Ireland around, especially what Robin was just saying in terms of making sure there's representation from youth and women and others.
Yeah, absolutely. It's just if I can come back just on the term limits in an Irish context, our most recent legislation brought in 12-year term limits, but it's subject to a transition period. The concern around term limits, and fully get from Banny and Robin's point about you're only really getting up to speed and experience. For us, we would be concerned that there will be a large cohort of people who are experienced will leave at the same time, and replacing them is difficult enough as it is. So it just needs to be carefully managed. In terms of trying to get more diverse views on credit union boards, that's always been a difficult challenge. And with our fitness and probity regime, it's not something you can do straight away. It has to be a plan for, because there are a lot of questions that have to be asked of would-be board directors. We have recent survey data I'll send around, but we're fortunate enough that at our CEO level, we've a 50-50 gender split. On our boards, it's more skewed towards male than female, but it has improved in recent years. That's been down to some really good work by credit unions on the ground rather than any strategy, central strategy that's been thought up of. But it is something we're very conscious of. As Robin said there, you do want to bring people into an environment where there are a wide diversity of age groups as well. We are trying to grow our loan books, and to Robin's point, it is people under 40 who will be driving our loan growth rather than people towards the end of their careers. So it is something that we've tried to do. In our recruitment strategy, we are partnering with a number of third level colleges and universities. We're also trying to partner up with a number of third party accountancy qualifications, so that when people are going through their accountancy qualifications or indeed college, they may consider joining boards of credit unions, or at least planting the seed that we might get them to consider joining a board of a credit union years to come. But it is a challenge, that recruitment, but certainly we do want to have broad representation from all levels of society, all age groups, all genders, and all nationalities on boards on credit unions in Ireland. It does bring a level of robust challenge at board levels that is absolutely essential for our credit unions.
Erin, could I jump in again real quick?
Please.
For a question to Barry. Thank you. So Barry, do you still have nominating committees who
We
are
do, yeah,
charged
absolutely. Yeah, we do. Yeah, the nominating committee is tasked with getting a pipeline of would-be directors. Where the big challenge really has been is we've had a consolidation in the number of credit unions, so a number of mergers of credit unions. So for some people, they've been on a board for quite a while of, let's say, Credit Union A, and then there's a merger and it becomes Credit Union B, and it's difficult to keep the directors. It's a natural point where people would walk away. So the nominating committees have a very difficult job.
So one thing we have here is we've more or less abolished nominations from the floor. One or two credit unions still do it. I see you're all nodding. That was a huge issue with governance. You know, somebody would come to a meeting, mouth off, ask questions, make it seem as if, you know, they could be good advocates for the members. They join the board and either do nothing or don't have any of the skill sets really required for the board. So with the help of our regulator, we've actually had most credit unions form rules to say that there are no longer nominations for the floor. The nominating committee will bring persons who, you know, fill a set. If there are nominations from the membership and there's a period for that, then those persons will be considered. And there may even be an election, but it will be between 2 or 3 persons who the nominating committee have shortlisted, and that actually makes the process of annual general meetings much more efficient and effective.
I can also share that we also do not elect directors from the floor. That used to be a big challenge. So the nomination committee will handle the issues. But Erin, I wanted us to look at another issue just to check with my colleagues here, to do with the structure of the board. Do we have the audit committee on the board? And then do we also have supervisory committee? I have seen this as a challenge in some countries. In some countries it is working, especially this in part of Africa. But I just want to learn how, for example, in Ireland, how are you doing it that way?
Yeah, I can jump in there. Yeah, absolutely. Thanks, Fambani. Yeah, we do indeed have, well, it's not called a supervisory committee anymore. The term changed to the board oversight committee, but that's independent of the board, elected at the AGM. And the main task really is to ensure the board is operating properly in compliance with legislation, policies, and rules. And it does report back to the AGM separately from the board. Larger credit unions would have audit committees. Now, they're normally called audit and risk committees, and they would really oversee the risk management framework that's laid down in the legislation, oversee financial reporting. And again, they would report via the annual report, but also they would report, that's a board committee. It's not independent of the board, but that would be standard practice in credit unions here, yeah.
Oh, okay.
But if you allow me though, interesting question. No, we do not have in any credit union in Jamaica a board subcommittee for audit. There is a supervisory committee that's still in our regulations, a requirement for it. But Barry, I have to tell you, I hate the name board oversight committee. That's just me personally. I don't like it. I think that opens the door for some conflict. I can just imagine my presidents of my credit union saying, "You mean I'm reporting to, you know, these guys can tell me what to do?" Yeah, I'm not crazy about that committee at all. We do have board committees which look at risk and at finances, obviously. But in terms of internal audit and even liaising with external auditors, that is the role of the supervisory committee.
Are there other forms of committees that you're looking at then within, whether it's the board or bringing in? I think people are really interested. This is a question we get a lot at World Council of how to structure those committees. What committees are formed out of the board? What are elected or appointed separately outside of there? I seem to remember someone also talking about a technology committee. Are there other committees that you're thinking about in terms of the structure?
I might jump in there if that's okay. We are seeing some credit unions starting to have IT committees. It's just the nature of the the evolution of services and credit unions. So there would be that would be unusual enough. We obviously have credit committees, credit control committees, membership committee, although we're not seeing as much of that at this stage, but we would have, they'd be the three main committees we'd see. Some credit unions are starting to look at asset liability committees. Now, they would all be formed from the board members, but the credit committees under our minimum competency code would have members of staff sitting on them, but it depends on the size of the credit union, how many staff members you can allocate to each committee. But there would be a lot of other committees in place.
Well,
Yeah,
Erin,
so
sorry, go ahead.
sorry.
Go ahead, everybody.
So I see the SACCO's now trying to think of ICT committees, even here, but no, I think only one or two have started doing that, and we still want to see if maybe that can be done in most of the SACCOs because of the era that we are in. We see also the marketing committee. Some call it the education committee, which is appointed by the board. So all the other committees are basically appointed by the board, by the board and amongst the board members, except the supervisory committee, which is done by the members at the general meeting. So I think that's what we see.
So in Jamaica, aside from the required board, supervisory committee, credit committees, we still have credit committees, but credit committees don't adjudicate loans much anymore. There is usually they usually oversee the portfolio, speak to things like, broad picture, what is delinquency like, how are the loans distributed, how is loan growth, that kind of thing. But and also waivers. If there's a waiver to policy, it usually goes to credit committee and possibly also to the board, depending on the if it's a size issue and so on. And it's important that all credit unions should have schedules of authority schedules to see what the limits are in terms of loan sizes, and even potentially waivers that may have to be, elevated to a higher level of management or to one of these committees. Many credit unions in Jamaica also have IT committees and marketing committees. A big issue here in Jamaica is, again, because we have, fairly high penetration, it is how to get more business from members. And it is up to those committees to liaise with management. And to Barry's point, we don't usually encourage board committees to also have staff members on it, but they can report to it or they can, advise it. So those are more advisory committees. We actually don't want a lot of committees, subcommittees from the board actually being involved in decision making at a very operational level. So we have to be careful of that. Erin.
Yeah, absolutely. Yeah, and thank you for that discussion. I mean, there was a lot packed in there, and I would just highlight too how important it is for credit unions and SACCOs and those in the financial cooperative space to be having these conversations together. So there's a lot we can learn from other regulated industries, but you can tell just from that conversation the unique aspects of a financial cooperative, thinking about, are you taking nominations from the floor, or what are the challenges with that? The unique structure of a credit union, I think, really calls for these internal kind of within the family discussions around how are credit unions globally facing some of these challenges. And really want to highlight too, I know Fumbani brought up education and that capacity building within the board members. That's something that I think is unique because you're really building off of what's coming from your membership to fully represent your field of membership. That's your pool of candidates where we are electing within that. And that often requires kind of a unique approach to education and making sure those skills and that capacity is there. So I appreciate you all kind of having that conversation as well. And one quick thing I would add too, just I know we've got folks from all across the world on there. One of the things the international standard setters, and really I've seen different governments focus on this following the financial crisis, that diversity of thought, of having people that represent, whether it's women on the board, youth, different age segments, different populations, different backgrounds of industries, that has really helped mitigate risk in terms of avoiding groupthink. Really well managed governance structures include that kind of diversity of thought. So glad to hear around the recruiting. And I know in some cases it's a challenge, some cases it's a not. But really making sure that those nominating committees are looking for that diversity is another pillar of good governance. So I appreciate you all kind of having that conversation as well. And I want to pull in. Oh, please, Robin, did you want to?
Yeah, thanks. And
Mhm.
you must have a hammer because you're hitting every nail on the head. A big part of credit union governance is member participation. It's there in the World Council guidelines. So one thing we do not want to do is to leave members out of the issues of governance. So an annual general meetings are important, but to your point, Erin, training up members so they have an understanding of how financial cooperatives work, of what their role is in the governance process, and preparing them for stepping up as volunteers is what is really unique for the entities that we run. And that's not to
Yeah.
be shortchanged. I mean, a bank manager doesn't worry about what his customers think in terms of governance. They, give them interest rates and fees, and we'll take care of the bank. They can't tell me how to run my business. So, even credit union employees need to understand that it's not a customer in front of them. It's someone who also is involved in the governance of the credit union at a very high level.
Well said. Well said. Fumbani, did you want to
So
jump in here? Yeah.
yes. When I look at issues of member participation, it still takes me to the challenge of capacity on the part of the members in terms of understanding their role as well. And you see I've seen some annual general meetings taking for the whole day. It is still part of governance that the members sometimes they don't really understand what is an annual general meeting. What do we want to get from an annual general meeting? They start asking very operational questions and all that. As much as we know that, it is their responsibility to do elections, to approve the financial statements, but sometimes they really do not understand their role. That takes me, therefore, to the need for us to continue educating our members. But the question has always been, how do we do that?
Yeah, thanks. That's a great comment and a good reminder too that how we run committee meetings, how we run board meetings, how the annual general meeting, all of that incorporates member voices, but it's important that everyone is aware of their role that they play within the credit union, taking ownership of their particular role. And, I think for those listening, if you're having challenges, globally and in your local sector around how the board relates to the CEO or senior management, or how the committees relate to each other, especially the audit or supervisory committee, and then, how the AGM is run. I think those are challenges globally that we're seeing. So you're not alone. So encourage everyone to keep having that conversation around really the heart and philosophy too of, how do you make sure that the credit union is meeting the needs of members and representing its community is a constant challenge. And I do want to bring in a quick question. I think this is a good spot for a question that came in from attendees, sort of related to boards and committees, but they wanted to know, does having family members on boards and committees violate good governance, considering that members could recuse themselves to avoid conflicts of interest? And so generally Robin always laughs because I give the hard questions here as we come up on this panel. I invite them. They're so kind to come and have these conversations. And I just, keep throwing difficult questions at them. But, it's a good question around the larger issue of conflicts of interest. How do you address conflicts of interest? How do you identify them? I know many boards will have, at the beginning of theirs, they'll have a conflict of interest policy. They'll make sure they know when they need to recuse themselves. But, when we're talking about closed fields of membership in many cases across the world, I'm sure it's a different conversation. So I'll open this up to the group in case anyone would like to share a bit about how you handle that in your sector with family members and other conflicts of interest coming up.
Yeah, I might jump in there if that's okay, Aaron. Yeah, we would have conflict of interest policies, and as you said at the beginning of meetings, it would be normal practice to declare an interest. In terms of family members itself, I'm not aware of any specific issue that has arisen here in relation to that, but they would be, it wouldn't be encouraged. Certainly, in the fitness and probity standards. There is an expectation of independence. So I'm not aware of it becoming an issue. I don't know, maybe you've just been lucky, or is it the case that the nomination committees or what have you have deliberately tried to avoid issuances like that? Of itself, I wouldn't say once there's clear conflict of interest policies, and also we do have restrictions in terms of related party lending. So I wouldn't see it being a major issue in an Irish context. I'm not aware of any issues around it, but realistically, if it looks off, it probably would be something we would discourage. I would think would be my view on that. But really interested to hear from Bonnie and Robin's views.
Well, in Malawi, for example, it is not accepted. The law will not accept it. It's very clear under the issues of conflict of interest, and that is not encouraged.
Well, I don't know about legally, but in Jamaica, any credit union can become a member of a board, whether you're father, son, wife, brother, sister. All members should really have the opportunity to serve. And if they're elected by the membership, we don't think it's our role to stop them. We do, however, not want, the issue of persons coming onto boards, committees, because they're, shoved in there by whoever the other family member is going to be. And you may even have a board dominated by family members. It becomes almost a family business. And we, of course, would frown upon that. In Jamaica, we do have conflict of interest rules. Most credit unions, every credit union I can think of has those rules. And they also, here at the league, we also even have an annual declaration of assets and liabilities. Of course, we don't frown upon, directors borrowing from their own credit unions. That's part of the business. But a lot of waivers for directors, we don't encourage that at all. Directors giving businesses to companies or entities with whom they are involved, we absolutely do not support that. So, it's a small country, 3 million people, 1 million members. Chances are you're going to be related to someone who is in a credit union with you. So we do have some of those challenges, yes, but on a very small basis. And once I think we have those conflict of interest and declaration of asset rules in place, we think we're fairly covered on it.
Yeah, thanks so much for tackling that question on the fly. I think that is a great way to sum it up in terms of making sure you have that strong conflicts of interest policy, that you're looking not only at familiar relationships, but the loans coming in is a key area where that could be a much higher risk. And globally, we've seen at World Council a lot of different approaches to some of that. But some credit unions do have field of memberships that are familial ties, and it's just very common that you will have family members within there, maybe more so than at other financial institutions. But yeah, thanks for really highlighting that importance of the conflict of interest and how you make sure you're monitoring that, and waivers or exceptions throughout that. We will stick with, there's another question in there that I thought in the Q&A that we could quickly touch on here. I know we're quickly I could talk to you all about governance issues all day long, but I know we are quickly coming to the end. But there was another question around, for those that do have specific fit and proper standards in your kind of regulatory code, how did you develop them? And so even if it weren't in the code, how were those fit and proper standards really developed? I think a lot of countries are looking at how do we optimize or continue to evolve those standards in their own countries.
Well, if I could start off again,
Please.
Money. The credit union movement didn't really have a lot of say in the development of our F&P. those were pretty much handed down from our regulator, and there's a standard already established for other regulated entities. You can't be a bankrupt or having been currently a delinquent member of your credit union. You're not supposed to have been, recently adjudicated of unsound mind. Some, fairly basic, but sometimes controversial items get thrown in there. The issue of bankruptcy is one we actually have looked at for a while. There are leaders of government now, not in Jamaica, but in other entities, who have declared bankruptcy several times. And they are, president or prime minister or whatever. In Jamaica, if you are such, you are prevented. If you've even declared bankruptcy once, you're prevented from serving on the board of any financial entity. And that's something we have to think about and maybe give some more thought to as to, how that's shaped going forward.
Might jump in
Well,
there as well. Sorry, Fumbana, you go ahead.
Yeah, in Malawi, I think what we did is we worked with the regulator, especially the National Association. I think we did a lot of work with the regulator. The first draft that came out, for example, it just came from the regulators, their understanding of regulation, and maybe just putting one or two things from the bank supervision, from the bank law and all that. It was too heavy, and then we decided to really advocate, and we sat with the regulator. Then we created a committee that looked into the same. So most of the things we really had to discuss and come up with some of the standards that can really support the movement. So that's how we did it. And right now, the law is being reviewed, and the regulators come to us as a national association to do the same, at least to work together with them. We know they have the final say by the end of the day, but at least we contribute a lot in terms of formulation of the standards.
From an Irish context, very similar to Robin, in Jamaica, it was largely imposed upon us by a regulator, but the wider financial services went first. Effectively, they went 2011. The fitness and probity regime was introduced. Then there was a consultation period for credit unions in 2013 before it was introduced. And some of the changes between the banking sector, let's say, and credit unions, there was a phased approach to credit unions. And it started off with a smaller subset of senior managers before it got extended out. But we have had an opportunity to give feedback on the fitness and probity rules. They are well established, and a lot of the overall parameters around them are sensible. So it's difficult to argue about them, but they were largely set down for us by a regulator with some targeted changes for credit unions. But they're in place now over 10 years, so they're well established at this stage.
Yeah, thanks so much for all of you kind of tackling that other question live too, because I think it also, picking up on what all three of you said, really highlights the importance of coming together as a sector for advocacy to review, are these the appropriate fit and proper standards? In many cases, you may have the regulators sort of establishing them on their own and then going back and having to educate to make sure it really fits, the credit union model and our unique structure. One thing we've seen at World Council too is making sure we're sharing those global standards with each other. So if there are provisions that are working in your sector, this is the ongoing battle, right? No one kind of rests and gets to say now we've really hit the perfect regulatory sector. It's not overly burdensome. It's not underly, allowing bad actors to take advantage. We have hit the right sector. I've really never heard, that's what I live for each day, hoping that, we will get there. But there really is no one perfect standard. It's a constant evolution. And so that continuing that sharing of best practices, what has worked from a regulatory perspective, and then, really focusing on those advocacy efforts, or even having those conversations regularly with the regulators. I'm really happy to hear, that that's been effective in each of your systems. Now, We have just blown through this hour. I wish we could have continued on all day. I might give each panelist just a final word to or thought here to share. If there's something, there were many questions we didn't have a chance to get to, but if there's something that really rises to the top for each of you that you haven't had a chance to share, whether it's looking ahead at future modernizations or things that you think are really critical for the credit union sector to be thinking about in terms of governance, I might ask each of you here before we bring Greg on to kind of wrap us up to just share a final thought, if you would, and I'll let you all decide who's ready to go first with the final kind of thought for the group there.
Well, I can start. Erin, there's one thing that I wanted to share. This is about the self-serving boards that a board member, some of the board members, some of the CEOs, looking at what is in it for me, are basically trying to serve themselves. I think when we talk of governance, we should be also looking at leadership, that we need to be looking at a board member being a servant leader, somebody who wants to save the members and not serving themselves. These are all issues of conflict of interest, and we see it very, very often. This is where we need a lot of capacity building and a lot of benchmarking, learning from other um, uh, circles, or learning across to see how are others doing it. Because by the end of the day, it is one of the issues that is really killing governance in most of our circles.
Well said.
If you don't mind, Barry, I'll go next. Thanks for that from Bonnie. So if there's anything I'd want to probably close as a thought, it's that I'd want to encourage board and management to read about governance. It's important as thought leaders and leaders of this movement that we leave it in better shape than we found it. And it's only through reading up and linking with World Council and your regional confederations and your leagues, if you have them, that you're going to get that kind of guidance. You can trust the internet if you want, but I'd rather trust persons we know have the experience. And to tackle things like transparency, which we haven't really discussed today, which do you reveal and when? Me myself, I always err to the side of doing everything in the middle of the street at midday in front of a police station, so everybody knows what it is we're doing and where we're going and what the objective of this thing is to do. But it can be difficult to do. Sometimes you want to show all of your strategy at once, because it is subject to criticism and naysayers, as well as being stolen maybe by our competitors. But it's very important that board members, especially, and senior management, take this on very seriously, to think about governance, look at your policies regularly in line with international best practices.
Yeah, I'd really echo what Robin said there. I think the sharing of best practices and really highlighting that what's included and set down in the legislation and regulations, they're the bare minimum. If we're true to our cooperative movement roots, we really want to be above and beyond the regulatory minimums and really looking at what works best for our system is really what I'd push on, and that ongoing education is absolutely vital.
That was very well said from all three of you. And I think as we bring Greg back on to wrap up, I just really want to say, a heartfelt thank you for taking the time. You did this in Stockholm. It was really such a engaging conversation, and to have it again here to continue that conversation, I think really highlights, from Bonnie, what you were talking about and kind of that servant leadership and willingness to share your expertise and your thoughts with the global community. So just a big thank you to our three panelists here for taking time to do that. And Greg, I think we might bring you back in here and with the last minute here to wrap us up and send us off.
Thank you. And I just want to say, I don't think I've seen a webinar that held on to its audience as long as this one did before. So just about everybody stayed for the whole hour. So that was great to see. We want to just wrap this up by saying, if you enjoyed the webinar, you want to watch it again or recommend it to a colleague, you'll be able to find it later today on the World Council YouTube channel. That's at www.youtube.com/WOCU, youtube.com/WOCCU. And with advocacy being World Council of Credit Union's primary focus moving forward, I encourage you to sign up now, receive information about the 2026 World Credit Union Conference. It is set for next July in Sydney, Australia. We'll be co-hosting it with the Customer-Owned Banking Association, our direct member organization in Australia, from July 19th to the 22nd. You can be guaranteed it's going to feature many more panel discussions just like this one on advocacy and regulatory topics. Simply scan the QR code on your screen right now to sign up for more information. If you don't have your phone handy, head to wcuc.org. That's wcuc.org. Registration will be open later this year. That's it for this virtual event. Thanks for joining us, everybody. Have a great rest of your day.